How worried are you that we're going to see similar incidents?
And good morning, everybody. Look, I'm somewhat what His Excellency said. I think it's a warning signal what we have seen. There are some real facts behind it, but there's a lot of sentiment and concerns also spreading. Now, when I look to what has happened, Silicon Valley Bank and subsequently others are mid-sized banks. They were not really subject to stringent regulation as we have in other parts of the world, as for example in Europe. They were not subject to the key Basel III requirements. These are only the large US banks that are subject to that. When you look to Europe or to Switzerland, I know very well it's not only the group that is subject to Basel III, liquidity ratios, HQLA and other requirements, but even on the subsidiaries like in the US, in the UK or somewhere else, you have exactly the same regimes that look much closer to, in particular, asset and liability matches, respectively, which matches that went wrong, as we have seen now with Silicon Valley Bank. So in this regard, I think it's somewhat local and contained, but obviously we saw early in the week, huge concerns spreading somewhat globally. I hope that the genie is going back into the bottle. We need to see what is real, but it's a warning signal. We all come out now of many, many years of, abundant monetary supply. We saw last year, everybody was shocked by the inflation that we have seen. Trust me, we'll come to that topic somewhere later on. And now, obviously, the whole discussion is, okay, what is now happening to interest rates in light to what we have seen in the US? So it shows, on one hand, fragility. On the other hand, we need to look also to fundamentals and, a lot what has happened in banking regulations when this is stringently implemented is definitely here to stabilize the system.